That's exactly what we do here, right? We give game plans and customizations in order to help you get on the path that you want to go on, right? So I know that we have some people in here from, you know, Tomball, Cypress, Texas, Katie, Bryan College Station. Super excited to have y'all here. Um, one of the things that we do and what we're passionate about is very much so strategy. It's the whole thing of how you get set up from success from the very beginning. Everybody tells you whenever you meet with an agent, and that whenever you actually have a conversation with them, that you should have your pre-approval letter ready to go before you ever start looking at homes that you want to see on the market. Well, if you're finding them on HAR, if you're finding them on Zillow, wherever you're finding them from, start with a pre-approval letter. This is what we're doing today. It's not necessarily the pre-approval, but it's the work prior to a pre-approval. I have clients call me a year in advance all the time in regards to going, what's the next step once I get there? And maybe right now isn't the time, but at least we can get a game plan to see if you're here, what needs to get you here, so that you are being set up for optimal success, right? It's not just about getting you done. And I tell this to my clients all the time. It's not just about getting you a pre-approval in your hands. It's about, your economics better than I do. And I want to customize and strategize your loan to fit not just your needs, but your financial goals. And that's what it's about. That's how we win in this market. And that's how we partner up with your agent to work alongside with you as well. So let's talk about what it looks like to prepare for it. There are a number of different things that go into a pre-approval. You have your income, everything that you make, that you report to Uncle Sam. That's extremely important. The things that you can document. If you are a 1099 buyer, then you're writing things off. Now we have tons of different programs so that if you don't report everything on there, then we can pivot and say, okay, well, this is the type of loan that we need. Or we need a loan that only goes off of your bank statements, or only goes off of your 1099s, or only goes off of a verification of employment. That's going to be dependent upon your credit scores. What your credit scores are, what's reporting on your credit, and the amount of debt that you have all plays a part into that as well, right? The higher credit scores, really great credit, is 740 and up. You're looking probably about above average 680 area. Under 640, that still works. That's still okay. We're still working with different type of products. We're working more with the government loans because those are a little bit more lenient than our standard conventional loans or our non-QM products that allow for diversified types of income, right? So, and then we're looking at credit scores below 580. Fannie Mae now has a guideline, or has removed its guideline on what credit score requirements are required, right? FHA requires a minimum of a 580 for you to put 3.5% down. Anything from a 580 to 500 with FHA requires 10% down. Fannie Mae has released their credit score requirement along with Freddie Mac, saying that they don't have a credit score requirement in order to get them qualified. However, with Fannie Mae and Freddie Mac, standard conventional loans, if you put down less than 20%, you're required to have mortgage insurance. These mortgage insurance companies that are private mortgage insurance companies that go along with the conventional loan do have credit score requirements. So just because they have released them not needing a specific score doesn't mean that the mortgage insurance companies that go alongside with that are there. Now, if you're putting 20% down, and I have a few clients that this is under right now that are sent out a pre-approval yesterday for a 489. They kind of went through some things. Life happens. Life is there. Life is lifing, and we are all subject to things that we have to adapt for. But they have a 489. They have 20% down, and I was able to get them qualified because of the amount of money that they have down, what their debt to income ratio was, and what the amount of money that they have left over into the bank. So those exist. But again, the caveat to that is, what is your scores, or what is your down payment that you have with it? And then the other caveat to it is the interest rates that go along with that. Now, there's always ways to work around that. You can have the seller pay for your closing costs to help you buy down that interest rate, and where you're really only paying the standard cost and your down payment, if that's something that you're interested in. And then that way it's allowing you to take advantage of a market rate. And those are how we structure. That's how we strategize. That's how we customize, right? And there's different ways that you can do all of this. Let's talk about a term I just used, debt to income ratios. Debt to income ratios it's a percentage, and each lender on any program, there is what's called a front ratio, which is your income. It's a percentage of your housing, your proposed housing payment. The payment of the house that you want to purchase is a percentage of your income. And that is your gross income. And that, again, that's the income that we're utilizing or that we're using to qualify for your home, whether it's an unconventional type of loan, or whether it's a government loan or a standard conventional loan, where we're using the income that we can document, that you report to the IRS, right? So you have the front ratio, your proposed housing payment, which is a percentage of your income. And then you have your back ratio, which your back ratio is your proposed housing payment plus any of the debt that you have listed on your credit report that are revolvings, installments, things like that, which is a percentage of your income as well. And so one ratio typically is higher than the other unless you don't have any debt, and then they both are the same number. And so there's different requirements for each of those. Our job is to make sure that your debt and what you qualify for all fit within those requirements. And again, that's part of strategy. That's part of customizing. And that's what we want to do. And the other part of customizing and getting that game plan, and again, like I told you earlier, if I get you qualified, it's not necessarily whether we get you qualified, it's what are we able to do to strategize and customize to fit your economic, not just needs, but wants. And so I have clients that sit there and tell me, I want my payment to be this. I don't want to come out of pocket any more than this. Okay, well, how do we achieve that for you? Is that structuring loans different ways where, okay, well, we don't want to come a lot out of pocket, but how do we minimize mortgage insurance? Or how do we buy down the interest rate? Or how do we utilize the taxes and homestead exemptions? And that's extremely important for a lender that you are working with. No matter what lender you go with, you need to be able to talk to them about your payments that you are making and the best way to get a very low payment. It's not always about the interest rate. The interest rate is very, very important, but what's most important is structuring your loan right to where your money is working for you. I have another buyer who is an amazing qualified buyer. She has the credit, she has the income, she has the down payment, she has all of the things, and everything is lining up for her, which is great and amazing. But it's not just about getting her approved. It's about strategizing and customizing that payment to be where she wants it to be and to fit her needs and all of the things that she has going on with her loan, making sure that we're not exceeding a certain amount. And this is her number, but just because this is her number, I want her to stay under that number as far as her funds to close and still be under the number that she wants for her monthly payment. And so it's extremely important that whoever you're working with knows that they can work alone more ways than just the standard working ways. Like, there's tons of different ways to pay for mortgage insurance. There's tons of different ways to set up an escrow account and how to structure your down payment accordingly, how to utilize down payment assistance programs. A lot of people think, well, yes, I want down payment assistance. And some people think that it's capped on certain incomes, but do you know what the income requirement is for down payment assistance? Some companies have 90, some companies have 130, some companies don't have an income requirement. And then utilizing mortgage credit certificate to be able to use that as a tax deduction on your taxes each year is another way for you to be able to make your money work for you. And that's what we want to talk about, right? So we've talked about credit in the different stages. We've talked about debt to income ratios. We've talked about being ready, preparing before you actually go and looking at the home. So whenever you take an application with a lender, and we're going to go over, like we said, we're going to talk about the credit. We're going to talk to a buyer about their assets and what they want to bring. We want to talk to people about what their debt is. So if you are not in a position right now, then we definitely want to make sure that you're partnering with somebody and you're asking the questions with whoever you're going with that, okay, well, my credit is not here right now, or my situation is not here right now, but how do I get from X to Z? Or I'm sorry, from A to Z. X to Z is just only a couple of steps, right? So how do we get from A to Z? If we're not where we need to be right now, how do I put a plan in place so that we are definitely going down the right path from where you need to be during that timeline, however long that timeline is. And you and your lender can work extremely close together to figure out what that timeline looks like. So, I actually call this our home path program. And when I have people that are on this home path program, we look specifically at the things that are listed on the credit report. If that is something that is, what's the hesitation right now? If it's income, then we look at why the income is being an issue and holding us back as of right now, and then what we can do to subsidize income, or what needs to take place in order for income not to be an issue, or what kind of alternative solutions we can look at in that place as well. If it's living history or debt that we need to consolidate, well, then how do we do that? How do we reduce the amount of debt so that your ratios and your qualifying parameters are within the scope that you need them to be? So make sure that whoever you're working with are looking at paths and steps so that each one of those markers are being met. So that whenever, if it's a 3-month path, if it's a 6-month path, if it's a 12-month path. And then also you want to make sure that you trust and have a relationship during however long that stint is, so that they know exactly what's going on. So when you go back to them, y'all already have that relationship. Y'all already have that connection. They already have the story and everything else that's going on. And they're going to be setting you up on this plan. They need to be active in this plan and actively pursuing you because you deserve to be pursued. So we're going to talk about, so we've talked about setting up that plan. Well, let's say that we're right where we need to be. My favorite type of loan and working with buyers, or working with, is the customizing part of it, right? The strategizing part of it. If we have all of our stars that are aligning, we know that we've taken the pre-approval, we've gotten your application, we've looked at your credit, whatever the score may be, puts us in a position to where we can proceed forward right now. And again, you don't need a 700 credit score to qualify. You can go down to a 580 on FHA if you have the funds. If you're looking for down payment assistance, there are some down payment assistance that allow you to go down to a 600 credit score. What that looks like compared to a higher credit score, we want to make sure that you are taking advantage of the best down payment assistance there are. So the higher, the better. But if it is lower, you have two choices. You can take advantage of what is available that can give us an approval, or we put you on a home path to get where you need to be. So you're taking advantage of a different one that put you in a better financial situation. And that's up to you. Our job is not to try to convince you of anything. It's to provide you with all of the information and knowledge that you need to know as a homeowner so that you can make the right decisions. And that's what we do. That's how we customize. That's how we strategize. And that's what I love to do. So if you are there and it's where we're in a position to where we are getting you qualified, well, what comes next after that? Okay, so we've looked at the income, we've looked at the credit, we've looked at the funds to close and reserves and all of our assets, right? All of our money that's in the bank. That's what assets are, is the money that you hold in a bank or in a 401k. Now make sure that if you have any cash on hand, if you're getting a gift from anybody, that you're talking to your lender, because your lender is going to share with you the things that are allowed and the things that are not allowed according to guidelines, according to make sure that whenever you do close on your home, it is a solid loan approval whenever you go in front of the underwriter. And so after we've discussed all those things and how to document everything correctly and set you up for success through underwriting, well, the next part's the fun part, right? The next part is finding that property, finding the one that we've said yes to the address. Haha. We've said yes to the address. And it's all about marry the house, date the rate, because things right now, as far as where the market is, the market's going to change, right? But if you commit to the property, if property values continue to go up, which they always have and they always will, but the market drops again a little bit later, well, then you can refinance a little bit later. You can take advantage of the equity that you have. You can take advantage of a lower rate at a different point in time. But if you are committing to a property, you're locking in the value that you have now as that being what you're purchasing the house for compared to what you're purchasing it at a later date. So we want to talk about what that looks like for you, right? So I can get you qualified on a home and get you qualified for an approval, but my approval is not based off of a purchase price. It's based off of a payment. And so when we're looking at the payment, we're going to look at what that is for you on any specific type of property. And I may have a property that you're purchasing at a $300,000 house, and that payment can actually be the same as a property on a $250,000 house. And why is that? Well, if my purchase prices are different, well, wouldn't that mean that my payment would be lower? Well, not necessarily. If you have a $250,000 house and your tax rate on a $250,000 house is higher than your tax rate on a $300,000 house, and your house is older than that $300,000 house, well, then your payment actually either might be the same or higher. It really just depends. So when we qualify you, we're qualifying you based off of a payment. And then we can find a property that fits that payment. And I have clients that send me addresses, and we want to go and see exactly how we can customize it to make it fit what they're looking for and what their needs are. And so it's just extremely important that we pay attention to these types of things whenever we're talking about your approvals and your qualifications. And so I know that many people are going to have many questions throughout this process. And again, you want to make sure that you're working with a lender that's standing beside you. I tell my clients that you have the ability to reach me. I am your new honorary BFF. So definitely call, ask the questions. Again, we're not here to try to convince you to do something. We're here to provide you with the knowledge so that you are fully capable and have everything that you need to make the decisions for you and your family and your investments. And that's what we do. That's why we're passionate about what we do. So again, if you have questions, in regards to what the payments are or what a specific property is, run the scenarios by your loan officer. Call us up and say, this is what I want. Let me have the details on this, and make sure they're working alongside with you, because again, you deserve to be pursued, right? This is your investment. This is not something that is done every single day. This is a huge investment that puts steps forward for generational wealth and puts steps forward for the American dream. And it's putting steps forward for you to build equity and wealth into your home. So We want to make sure that we're setting you and your family and your future up for success. So we found a property. Yay! We found the payment that matches the property that's, exactly where we want to be. And now we go under contract. It is going to be extremely important that when you find this property and you start to go under contract, that your lender and your realtor are working side by side to make sure that they are setting that up to your best advantage. You have the sellers who have their agent, the buyer, you as the buyer have your agent, and the two of them are going to negotiate. My job as a lender is to make sure that I'm working alongside your realtor to explain to them the things that we necessarily need to do in structuring your contract correctly to make sure that how you wanted it specifically to be structured as far as your funds to close, your payment, all of that is reflected into that contract. And so that there's no surprises for you. And then whenever we can do that, now we are under contract and you are starting to close. It's very important that during this process, even while you're getting pre-qualified, you limit your credit inquiries. Don't have your credit pulled. Don't go out and get brand new debt. Don't buy a car. Don't quit your job. If you do have, and understand, life happens at different stages, right? And who knows what's going to happen from one minute to the next. So if you get a brand new job and you want to take that job, talk to your lender and see how that affects you and your approval. If it does, it may not. If you're getting a salary position and it's a higher income, by all means, take it. Definitely talk to your lender first. If you're changing from salary to hourly, well, that's a different question, and we need to make sure that we're structuring it correctly. If you are W-2'd and then you're going to 1099, that's definitely a different question, and we need to make sure that we're structuring it correctly for you. And these are all the questions that you can ask your lender. If you have something, if you're going out and you're purchasing a car or you're getting a new credit card or things like that, we're going to see how those are continuing to pop up on your credit report. And again, that affects the debt to income ratio. And what's the debt to income ratio? It's your proposed housing payment plus the debt that you have on your credit report, like installment loans, car loans, credit cards, all of the above. And it puts them together and makes it a percentage of your income. So we want to make sure that that stays within the qualifying parameters that we've got you set up for, right? So again, don't pull your credit. Don't quit your job. Talk to your lender about all of those. We talked about assets earlier. If you're getting a large sum of money, unless it's directly from your employer or it can be legitimately documented, make sure that you're talking to your lender about what the next steps are. We want to make sure that we are correctly telling you how to document these large funds. So if you're getting a gift from a family member, amazing. That's definitely allowed, but we have to document it a certain way. And we want to make sure that we're setting you up to do it the right way. And it's not that difficult. But what we don't want to do is we don't want to just go ahead and put it into your bank account and say, yeah, this is what I got. Well, okay, let's back it up, and because I can't source cash deposit. If you have a large sum of money that is sitting at home and underneath your bed or in a safety deposit box or what have you, if I can't source where it comes from, then I'm not going to be able to use those funds. Because at the end of the day, the investors want to make sure that they are not putting themselves in a position to have their first lien jeopardized, and we hold the first lien. So we have to make sure that any large sums of money can be documented. And again, ask your lender. It's super, super easy on how to document it correctly. So just make sure that you, again, have that really close connection and relationship and conversation communication skills with your lender so that they, again, are providing you the information that you need in order to set you up for success. That's all we do. That's how we guide you. That's how we integrate everything that we've got going on our side into what you're trying to achieve. It's just by giving you the information so that you can make your decisions. Again, I am here to help at any point in time any questions that you may have. So feel free to reach out to me, 832-253-7309. Now, once we get your approval, you're going to go through underwriting. They're going to document everything. We've already talked about how they're going to document your assets, how they're going to document your income, whether it's through W-2s and pay stubs and verifications of employment through your employer, how they're going to document your debt through your credit report, all those great things. An underwriter is going to look at all of these documents and they're going to say, yes, I agree with this approval. Here are all the things that I need in order to sign off per agency guidelines. And then the loan officer and their processor, their team, is going to work very closely with you to get all of these items in and then send you back in for a final approval after they get everything with the property taken care of on the appraisal and title and all of that great side. And so about 30 days after you have gone under contract, typically the timeline's about 30 days. It can be less, it can be more. Then you close on your home and you get the keys and you get the funding. During this 30-day process, it's imperative that your lender is checking in with you, that your realtor is checking in with you, that your questions are being answered. You don't know what you don't know. So if you have questions, ask. Make sure they're sharing with you the things that are going on in the different stages with you, and that if there's any red flags that you have let them know up front, I want to be made aware immediately, please, because I am, again, it's an investment. And we want to make sure that if there are red flags, that you are aware. My job is not always to tell you the things that you want to know, but the things that you need to know. Because again, we want to make sure that you have all the information for you to make the decisions that you need, however red flags come across. And the red flags may not have anything to do with you. The red flags may have something to do with the property that comes up through appraisals or title searches or things like that. So if we're doing our due diligence up front through the pre-approval process, then you really shouldn't have any red flags come up as far as the things that are on your side. But again, that's close communication that you need to have with your lender. Guys, it's been a pleasure talking to y'all about all of the things that we've got going on. If you have any questions, let us know. We're super excited that you are on this path and on this journey to get in the position to work with people. So if you need anything, 832-253-7309. I'm going to send you a copy of this webinar in the email addresses from whenever you registered. We're super excited. And again, have an amazing day.